heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
I'm Caroline Hyde at Bloomberg's World Headquarters in New York.
And I'm Ed Ludlow in San Francisco. We're back, Caro. This is Bloomberg Technology.
And Ed, coming up, the Tesla challenge. Look, the company cuts its prices in China again, sparking worries of another global price war.
Plus, PayPal has a new CEO finally. Details on the company's new leader and how he may be able to help a stock that's slumped as growth slowed post-pandemic.
Oh, and Zuckerberg telling speculators that it's time to move on from the potential cage fight with Elon Musk. But will we? More on that later this hour. But first, let's check in on these markets. It's been a while since I've checked in on them, Ed, and I'm looking at 0.6% higher on the Nasdaq, actually managing to pick ourselves up from some of the concerns we had, particularly anxiety around China. That is why I shine a light on what's happening with the big Chinese names that traded here in the US. They are still under pressure, but not as much as they were in earlier days trading. They're off by more than 1.3% at one point. We're now off by about half of that. This still is the worries, the anxiety around wealth management and exposure there over in China, of course. What's worrying with the property market, basically how much the government will stimulate this particular economy. We are still seeing some anxiety in the bond market. Look, yields, what a couple of weeks I missed in terms of the 10-year, and the fact that we're now at almost 2 on the 10-year that we're seeing. We're basically at 5% on the 2-year, but we still see that yield move absolutely higher on the 10-year as it stands. So still some worries. I tell you whether we've seen some resilience over the last few trading days. A little bit of a knockdown on Sunday trading, but remember that's because we have thin volumes. And look, at the moment we have thin volumes no matter really what asset class you look at. But I'm looking at what's happening in Bitcoin, and look, we're still managing to tread water in that 29,000 level. So after the last few trading days, we very much feel range bound, a little bit pushing up on the higher side as we speak though, Ed.
Yeah, 3 quick news stories we're going to give you more details on during the program. Tesla's down 2%, trimming prices on higher spec Model Ys in China. Steve Wesley, who's a former Tesla board member, is going to join us in just a moment. Sticking with the automotive theme, Ford is modestly higher. Peter Stern, longtime Apple alum, is joining Ford to lead the software and integrated services part of that business. We will bring you more details later on. And then PayPal finally has named its CEO. We will tell you who that is later in the show. The big story overnight out of Asia is Hon Hai, or Foxconn is the unit we most closely cover. Shares actually up 1.4%. It's basically cut its sales outlook for the year, principally telling us that in the quarter and on a annual basis, the smartphone business is going to decline. In May, Caro, they told us that it would be flat in terms of top-line growth. This just adds to every story we've been covering in the last several weeks about the pain the smartphone market's feeling, principally here in the United States. But remember, Foxconn, or Hon Hai, the principal assembler of Apple's iPhone. And it matches the narrative that we got from Apple execs just a week ago during earnings.
Yeah, Apple, of course, is #1 customer, but it also reflects what we've heard from Qualcomm, what you've been hearing from TSMC, this overall narrative that you and I, the consumer, are slowing our purchases of smartphones and the like, electronics, but what also about business spend at the moment, how willing they are within this overall global economy, Ed?
We're tracking kind of this, like, crystal ball of commentary. So Tim Cook, Luca Maestri saying 2 consecutive quarters of smartphone slowdown here in the US. Sony, which people forget is a massive supplier for the camera sensors for smartphones, saying the rebound's coming 2024. So it's a really dim outlook for what is a core piece of electronics for consumers and businesses globally.
And I love the Bloomberg Intelligence perspective. Always you get it in the BI wrap-up. And saying revenue could be affected by muted iPhone growth going into 2023, margin pressure due to perhaps even a lockdown impact that we still remember of China. And we want to stick on that theme, Ed. We want to stick on China because it's really the narrative of the day, isn't it? Tesla rolling out new rounds of price cuts over there, according to its Weibo account. Now it's reigniting those fears that we'd sort of pushed to the side for a minute. We thought this price war was on hold, but no, a whole host of automakers over in Asia in the last week alone have been tapping back their prices. So we're really pleased to have, well, a former insider, someone who knows the company very well, Wesley Group managing partner Steve Wesley, who served on the board of Tesla. You chaired its audit committee for 3 years, Stephen. And really, I thought we'd sort of put this anxiety to bed, some sort of agreement between the key players in China that they wouldn't keep cutting prices, but it seems they have to.
It's resolution 2, but Elon's hard to predict. But here's what I think is happening. Every automaker in the world is going all electric. Tesla has a cost advantage over everybody else. They're simply put trying to grab market share. What American investors, I think, often don't understand is not only China, the largest auto market in the world now, you've got to win China if you're going to be the global winner. Tesla's being very aggressive. Interestingly, they make 54% of all Teslas made in China today. Part of the reason for that is they can make them less expensively. And I think Elon's trying to take advantage of that price advantage he has as a low-cost provider.
I mean, you say they're going for market share, but BYD is a fierce competitor. Ultimately, does it spell concerns more globally as well for EV competition?
Well, look, no one should be crying for the Chinese. Of the top 10 auto brands in the world, 7 of the 10 are Chinese. So most Americans are thinking, how are Ford and GM doing? The real smackdown is this. It's Tesla versus the Chinese, with Volkswagen coming in quickly because the biggest seller of vehicles in the world in 2022. They've got deep pockets, global manufacturing. But those are the big 3. Everybody else is trying to catch up. So it'll be an interesting battle. What's so fascinating to me is Tesla, really the leader in EVs for a long time, the first ones to connect every vehicle. They've really led the world, not just in bringing battery production in-house, increased robotization of manufacturing, but probably most importantly, really taking the lion's share of and optimizing for over-the-air software. That profit from software sales drops right to the bottom line. That's why the other news piece this morning, yes, you've got is Ford hired Apple's software head to help them figure out their software pricing. They need that profitability.
We're going to bring those details about Peter Stern later in the show. Hey, Steve, let's remind our Bloomberg Technology audience about these specific cuts. It's a $1,900 cut to the 2 highest spec Model Ys in China. So a 4.5% cut to the long range, a 3.8% to the performance spec of Model Y. Those are not the highest volume trims. But if Elon Musk came to you and said, you know what, I've changed my mind again. We're going to cut prices. We'll just keep targeting volume and growth. What would you have said to him?
Well, look, as I know better than most, Elon's awfully hard to predict fellow. But I'm looking at the market here, and I'm seeing Tesla trade down a bit. And I know investors are thinking, gosh, reduce profitability. I think that's short-sighted. Here you have a global battle, and Tesla has a chance to take more territory now, and I think they're doing precisely the right thing. 15 profitable quarters, close to $20 billion in profitability last year. They can afford it. Why not do the land grab now? I think that's what Tesla's thinking, and I think they're right to do it.
Hey, Steve, how's China changed since the time you were on Tesla's board as a priority for the company?
China was not even a speck in the rearview mirror. For the last 50 years, we've all been looking at the Japanese, increasingly to the Koreans. They make outstanding cars. And by the way, Hyundai and Kia coming out with the Iconic, these are great brands. They're going to be part of the picture. But China, simply put, was not in the picture. Fast forward 20 years, what's really changed is electric cars are really better in virtually every way. They're faster, they're better for the planet, they're more reliable. The big fly in the ointment is they just plain cost too much, but the cost per kilowatt hour has gone down dramatically. Think about this, from $1,100 a kilowatt hour down now to about 90. The reason the Chinese are doing so well, one, the Chinese government subsidizes their auto companies, but two, most all of the auto batteries in the world are made in China, and that gives them a competitive edge in battery pricing. The real question is, can the Chinese use their edge in lower cost batteries to catch up on the edge Tesla has in manufacturing and software?
Hey, Caroline, Steve's got a great grasp on the data. He's talking about 54% of production coming out of China, but it raises the question of, well, hold on, what if you cut back in China as well?
Yeah, I mean, when we're looking at a near third drop in shipments for the month of July coming from China. Steve, make this global for us for a moment, because they don't just produce in China. Yes, it's been a key area of focus, but they produce largely in the US, also in Germany. They're looking to expand. How much are we going to see a curtailment of overall production, or indeed a curtailment in overall profitability globally here?
Well, 2 points. One, Tesla loves producing in China because costs there are so low. But you'd be foolish not to be aware of the geopolitical concerns on the horizon. And that's why doubling down on the capacity size in Berlin, expanding capacity in China, and about to break ground this month with a new plant in Monterrey, Mexico. So Tesla's not stupid. They're diversifying. They're going to other markets like Mexico where they can enjoy the benefits of lower cost vehicles. But I must say, I think Elon, having survived the tough times 5, 6, 8 years ago, where it wasn't even sure the company would survive, is focused like a laser on making sure he has a cost advantage over the others. I think he's going to squeeze a lot of the new incumbents, and I think what you're going to see very quickly is this big global shakeout again between Tesla, who's sitting on top. The Chinese were coming quickly with very low-cost batteries, and Volkswagen, which is probably the other Western brand that I think has done the best at modernizing, bringing battery production in-house, and improving manufacturing capabilities.
Steve, very quickly, your reaction to Zach Kirkhorn, the CFO of the last 4 years, 13 years at the company, leaving Tesla?
Well, it's no surprise. Executives at Tesla tend to turn over fairly often. The fact that Zach survived as long as he did is a testament to him. But I don't think it's a surprise. You know, people tend to think Tesla is a one-person company, and Elon may be a visionary, but you got to give him and the Tesla board credit. They've built out their executive team. They're playing long ball here, and I think as you look at their revenues this year, I believe they'll crest $100 billion with the highest profitability in the auto industry. Hard to complain about what they're doing. Right now, they look a little smarter than the rest.
Wesley Group Managing Partner Steve Wesley, great to have you back on the show. Caroline and I, thank you very much. All right, time to move on here on Bloomberg Tech. That's what Meta CEO Mark Zuckerberg is telling the speculators about the cage fight between him and Elon Musk. Zuck took the threads on Sunday night saying, quote, "If Elon ever gets serious about a real date, an official event, he knows how to reach me. Otherwise, time to move on. I'm going to focus on competing with people who take the sport seriously," reference to MMA. Elon Musk responded on X by saying he can't wait to bang on his door tomorrow, which today, and we're going to have more on that story later this hour, Caroline. Real quick, in the EV space, Nikola shares down significantly, almost 9%, but they paired losses in the session. The reason I'm tracking this one is they buried the news, frankly, Friday night, and said that a fire at their facility, which came from the battery packs of battery electric trucks, was not foul play, as they previously said they suspected, but actually it was a malfunction in one of the suppliers of the battery pack. Again, this is a stock that's been an absolute roller coaster we've been talking about on the show. All right, speaking of the show, coming up, the next line of the Apple Watch said to come with a minor but flashy update, and just in time for the device's 10th anniversary. We'll have more details on what to watch, lots about watches. Watch 10. This is Bloomberg Technology. Amazon and US regulators are about to meet this week, the final step before a long-shot bid to break up the tech giant. Amazon will try and argue that its behavior is harmless, seeking to avoid a full-blown antitrust lawsuit in federal court. Will it work? It's the big question. Let's bring in Bloomberg's senior executive editor for technology. You're writing in Tech Daily about the showdown, and Bloomberg reported about the details of this meeting, that the FTC commissioners and reps from Amazon. But it seems like, despite the drama of the room, eyeball to eyeball, the FTC is going to go ahead anyway.
Right. Yeah, I mean, it's interesting for what it represents. It's almost like the whistle at the beginning of the game, the formal start of festivities. But it's a little bit of a ritual. In other cases, these meetings, also called last rites, can be significant. A company might bring its CEO. They might offer compromises to get out of the litigation. In this case, it's very unlikely. I think that everybody is going through the motions here. The FTC has been on this course probably ever since Lina Khan was nominated as commissioner by the Biden administration. She made her name arguing that Amazon was a monopoly that behaved competitively. And so I think the company has probably assumed ever since then that this day was coming.
And you made some rather nice sporting analogies in your story about that one as well, Brad. Just outline, if you will, just remind us where the key argument you think could land, could stick.
Yeah, I mean, it's interesting, Caroline, because unlike other companies, Microsoft in the 90s, maybe Google today, I mean, Amazon doesn't have the kind of commanding market share that we think of as a monopoly. I mean, in some cases, it's just a couple of percentage points of overall retail. It's high 40s in e-commerce in general. But I think the FTC is likely to define this market as U.S. retail marketplaces. So the likes of eBay or Walmart's marketplace, new companies like Shein and Temu. And in this respect, Amazon really does have the kind of percentage market share we think of as a monopoly, high 70%. And what the FTC is likely to argue is that this situation isn't bad for consumers, which would be the traditional way to analyze antitrust, but it's bad for smaller businesses. It's bad for competition, and in particular, it's bad for the small sellers that are forced to use Amazon, and that Amazon forces to use things like distribution, fulfillment by Amazon, or advertising, is basically increasing the amount of take or percent of the commission that it takes from these sellers and creating a very unfavorable situation. That at least will be the FTC's argument.
We've been through this story with Meta, in some sense Apple, most recently Microsoft and Activision, and investors don't seem to worry. Look at the share performance year to date. We always ask ourselves, are they paying attention? The upward trajectory of the stock would suggest, even if they are, they're sanguine about it.
Yeah, 2/3 increase this year in respect to Amazon. And look, judges haven't been all that favorable to this FTC either, right? I mean, they've lost a lot of these cases. And all the antitrust experts I spoke to think that the odds are long for the FTC with this case as well. So no, I think that investors are paying attention. I think they realize that, this FTC, the record hasn't been great. And what they're trying, which is a kind of wholesale reinterpretation of antitrust law, so far hasn't been that successful in the courts.
Even after that stock rise, there are 60 buys from analysts on this stock, 0 sells. Brad Stone, brilliant to have you. Thank you so much as we look ahead to that this week. Meanwhile, coming up, some strange live streaming trends that are taking off on TikTok. We're going to discuss them a little bit more. And before we go to the robot dancers, let's get in on what is the dancer we work. Look, it's a penny stock. Just 24 cents it trades at. It was at a record low last week after, of course, it said it's got concerns about being a going concern. And it managed to rally once again on the day, a third straight day. This is Bloomberg Technology.
Time for Talking Tech. First up, former Apple executive Peter Stern is getting a new start at Ford. Stern was named president of the newly formed Ford Integrated Services, where he'll oversee software and services for some of Ford's key models. Stern served as vice president of services at Apple for more than 6 years, where he was a driving force behind the launch of Apple's portfolio of services like Apple TV+. Plus, MasterCard is buying a minority stake in the financial technology unit of Africa's biggest wireless carrier, MTN Group. While the size of MasterCard's stake won't be disclosed until the transaction is closed, MTN says that its fintech unit values it at $5.2 billion. And Elon Musk has been backing the Population Wellbeing Initiative, Bloomberg's reporting. In 2021, Musk donated some $10 million to the research group at the University of Texas, Austin, devoted to the study of population. We now know where that money went. Musk has been outspoken about the dangers of population collapse for some time. Caroline.
Fascinating one. Meanwhile, let's move on for a minute, Ed, because we've got to talk about the latest TikTok trend for just a second.
I didn't cheat on my diet. I just had an entanglement with a donut. Thank you for the snap that heart. Thank you for the panda.
Confused? That's okay. It's a relatively new trend where users are live streaming themselves while acting like robots, reacting with robot-like one-liners, as if they're kind of in a video game. That kind of stream might be a bit weird, but it's also the biggest live video trend to hit TikTok in the United States. So we've got to talk it all. It's a brilliant piece written by Alex Barinka to break down exactly, Alex, what NPC or non-playable character trend is all about. Why is it going to help TikTok sell stuff here in the US?
Well, if you're just somebody who's seeing that for the first time, it looks weird, it looks silly, but it's really potentially important for TikTok. As you mentioned, Caroline, this is the biggest trend on live stream video in the US for TikTok since it's really been pushing it. And live stream video for TikTok is more than just people, getting gifts sent to them, making money off of those gifts. It's a key part of its global commerce strategy. TikTok's super strong in e-commerce in places like Southeast Asia, and live stream commerce, live stream video where folks sell things, that is kind of the key to their commerce over there. Here in the US, though, that hasn't worked. I talked to sources close to the company, and they said as they've moved commerce over here for TikTok, they've actually had to split their strategy. They're both educating and evangelizing live stream video while they're building out their commerce operations. So to see something like this, where users are organically on their own, really kind of creating a trend and giving people a reason to tune into live, this brings TikTok that much closer to potentially becoming a global superpower in live stream shopping.
I'm sorry. Let's bring it up again. Let's show it again. And Alex, just explain what is happening. I know NPC. I talk about NPC all the time. Just literally explain what I'm looking at.
Yeah, this is Crystal, one of the creators that I spoke to. She's on a live stream and people are sending her things like corn, and she'll exclaim, "It's corn." Or they'll spend, 10 cents to send her this cowboy hat that you see, and she'll say the same kind of yeehaw phrase. It's something that has gotten viewers really interested because they're curious. If I spend 6 cents to send her a hot dog emoji, what will she do if I spend more? And it's actually for creators like Crystal who have found success here. Crystal told me she's can make $700 an hour. I chatted to another guy, John Moss. He streamed for 21 hours straight, doing a similar kind of thing where he was just insulting people and made $10,000 during that stream.
21 hours. I mean, kudos. What I'm interested in, Alex, is the talent that TikTok's bringing over, not just the entrepreneurs or indeed the creators, but just tell us about some of the people going to lead the money-making, just briefly.
Yeah, absolutely. You have the stars, the big names that you've known, the Charli D'Amelio's and Addison Rae's of the world. But trends like this and the algorithm on TikTok itself is really good at kind of birthing new stars. This live stream trend, we've seen kind of new people come into the limelight who are really good on live and could potentially be the future. But I will caution, it's not all rainbows and butterflies. John Moss said he doesn't know if he'll sell things, even though he'll get on stream. So we'll see if that commerce crosses the Rubicon.
Not to mention the likes of Marnie Levine and some of the executives joining too. Alex Barinka, brilliant reporting. Go read it. Meanwhile, coming up, let's talk PayPal, shall we? Replacing Dan Schulman with Intuit's Alex Chris. That's the new CEO. We'll talk it. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York.
Ed Ludlow here in San Francisco. Kara, quick check-in on the markets. NASDAQ 100, actually, tech-heavy index. We go to it every time, up 0.6%. Importantly, we're rebounding off the first back-to-back weekly decline for the NASDAQ 100 of 2023. If you go back to December, we had 4 straight weeks where the index declined on a weekly basis. Everything from the Fed to actually the tail end of last week, we started getting worried about China. You fold in the Tesla price cuts news overnight in China, and it kind of adds to the economic discussion that we're having, and it impacts the technology sector. The other name that we're watching, PayPal. We're going to get the details with Jenny Serrain, Bloomberg News, in just a minute. But the stock, it's up 1.7%. Alex Chris is coming in as the CEO. Finally, we know who the new CEO of PayPal is going to be, coming from Intuit. It's a stock that's kind of come out of the pandemic, right, and then slowed down because it hasn't maintained momentum that it saw in the depths of the pandemic era. But in the session, we are up 1.75%. Kara.
Yeah, let's stick with exactly that, the changing of the guard at PayPal. I'm pleased to say Jenny Serrain is with us from Bloomberg News. And I mean, Alex Chris, well known at Intuit, someone who helped do M&A, drive small businesses. Why is that good for PayPal?
Yeah, I mean, I think there's a few different things here. So he led the QuickBooks business, which basically, provides lots of different financial services to these small businesses all over the U.S. PayPal has been really focused on trying to get more of those small businesses to add the PayPal button to their website. So I think you're going to see some synergies there. I mean, the fact that he led the MailChimp acquisition back in 2021, you have a clear, seasoned deal maker at the helm, and PayPal has been a company that's not afraid to do M&A. So I think between those two things, you've got a lot of really interesting ingredients for a really cool mix here.
Jenny, there's a question on how settled this makes PayPal, right? I think we'll get to the pandemic story in a second. But actually, it's also a company that's seen a lot of departures. Long-standing executives have left PayPal in the last 2 years. How does Alex Chriss stabilize that?
Yeah, I mean, this has been one of the main overhangs on the stock is the fact that, Dan announced earlier this year he would be stepping away. And so folks have been really curious, what is a new leader going to look like? Is he going to take it in a new direction? Is this, going to be a whole new strategy afoot at PayPal? And so I think that's actually still to be determined, especially he's not a name that's very known to PayPal investors. He's not a payments guy. So I think there will be lots of questions still to come, but at least, the name and having an executive and having a clear plan for when he's coming in, that should help clear up at least some of it. But there is still quite a few unanswered questions here.
What have analysts been saying to the hire?
Yeah, I think, folks are really excited that they're bringing in someone with like this enterprise sales background and someone with, really a clear track record for delivering, especially on the small business front. But he's not a payments name. He's not someone that people really know. So I think there's still a little bit of trepidation, which I think is why you see the stock kind of just inching around, up a little bit today. I think there's still a fair amount of questions from folks kind of going ahead.
Bloomberg's Jenny Surain, now in New York with all the details on PayPal's new chief. The other big PayPal story that we've been covering here on Bloomberg Technology, Cara, is that PayPal's the first major U.S. financial institution to introduce its stablecoin called PayPal USD. To dive into the long-term goals for this new stablecoin, let's bring in Kavita Gupta, Delta Blockchain fund founder and general partner. This is an area you've been covering so closely. All of the notes I read when this news came out last week was about adoption headwinds, adoption concerns, adoption. You think that people will adopt it?
I think if you live, first of all, thank you for having me. But if you look within the crypto community, stablecoins are here to stay. You're already looking at countries like France, Germany, UK, and China, which has been at the far head of the curve, already using stablecoins and generating stablecoins. I mean, the multi-billion-dollar empire which Circle has created has already proved the adoption. What's really fascinating about the PayPal world is that it's not crypto building for crypto. I think PayPal is an amazing movement where now you're building for anybody sitting across the world and putting a dollar supremacy as a dollar pegged coin, digital dollar coin, all over the emerging markets, because PayPal is one of those US financial institutions where you actually use it more to order merchandises and to have freelancer services across the world. So I think adoption is already there. 450 million more the accounts now have the capacity to pay on stable coins using Ethereum.
So that use case...
sorry, Cara, go ahead.
Entirely my fault.
Both of you.
Just to follow up as I step all over Ed's question, I'm interested in, therefore, is it remittance? It's interesting on a day where we have, for example, Argentina, so clearly a country, and you reference emerging markets, that one has got huge instability in its own currency on the back of political headwinds or concerns and lack of security as it stands at the moment. I'm interested as to, is remittance where it's going to be for PayPal? What really does it drive forward in terms of stablecoins here?
I think there are three big places where this is going to completely change. The first is your payment system within US or anywhere where you have USD currency going. In today's world of Instagram, where I'm ordering stuff from all over the world, instead of waiting for 3 to 5 business days or looking at your verification of the cards, now you have a direct payment system. So the business payment system, especially for small businesses, this is a game changer, both domestically and globally. Second thing is it does take away technology-wise the amount of time it takes for your money to settle, for it to reach in a verified manner, but also the cost associated with it. Apart from a basic gas cost, actually it doesn't take 3% of your Visa fee or MasterCard fee. So that is a big game changer. And the third, as you said, remittances. I think this is really going to be a big one, coming from the World Bank IFC background, where we have till today have taken 5 business days to 7 business days and created the world of money market and repos. This completely changes the game with less than 30-second settlements. So in all those 3 spaces, technology-wise, it's great. But one thing which most of the people are not talking about, Caroline, is something to look. Wherever our global politics are moving with respect to US, our debt crisis, this becoming pegged coin does really change and reinforces the USD as the pivotal, as the most important currency and the supremacy of that currency in the payment system.
And Ed, what's so interesting is many have been shining a light more on the regulatory concerns of the US regarding all things crypto, but also stablecoins, the worry that these aren't transparently backed in some way, Ed.
Yeah, transparency or a lack of, right? Oh, I'm sorry, Kavita, I just want to make one point. The question then is, do regulators look at PayPal and say credibility? PayPal's getting into this space. We're more interested now in engaging and seeing this through the lens of credibility.
No, absolutely right. And it's very, very easy to put both the KYC things and the idea that please every quarterly basis or every monthly basis, show us how do you really have your reserves in your treasury management. I think those are the very easy things which even for companies like Tether and Circle, they have gone to SEC and said, just tell us what's acceptable, like any other bank have their treasury, whether those are pure and cash deposits, whether those are accounts receivable, whether those are in treasury. Just tell us, US Treasuries, what are the acceptable ways? And you can do a quarterly accounting outside. Anyways, PayPal is already a public company and they will have their accounts made public. So I don't think that should be a concern. In fact, if I would be on the regulatory body, what I would be seeing is how China has used their CBDC across Africa and across Latin America to make sure the payment over blockchain using their currency with the instant settlement now is becoming a bigger norm in their international trade mechanisms. And so why should US be behind and should use this as a way to completely go out and set themselves up?
This is why we wanted your global experience, having been with the World Bank, IFC. I'm interested, though, Kavita, in your experience. Like, you backed what? Polygon, Starkware, Sorare, like companies well known in the crypto and blockchain space. Does this make crypto and blockchain more exciting for US investments for you at the moment?
I think, first of all, it definitely puts Ethereum where what it should be look like, which is a technology-based platform and not just a speculative ether financial asset. So I do think people will see that there is a lot of technology usage for blockchain, what we have been talking about, whether you use just Ethereum and you use Polygon on top of it, or Starknet, or optimistic rollouts. The second thing which I'm very excited about is this opens up the whole regulatory conversations, which SEC has for the longest time has been tiptoeing, whether you're looking at it as a speculative financial means or you're looking at it as a technology. So I'm very, very excited that not only for US regulators, but for the whole world, that beyond certain individual frauds, there's a huge game-changing technology which is here to stay and ready to roll out.
Kavita Gupta, Delta Blockchain, is very good to catch up here on Bloomberg Technology. Thank you. Now, coming up here on the program, 40-year-old Silicon Valley VC firm IVP is heading, Caro, to London.
What?
More on that news next. Yeah, with IVP partner Eric Law. Real quick one, important. Shares of Nvidia are up 5%. Morgan Stanley's out with a note saying, buy the stock. This is a stock that's up more than 190% year to date, but there's been a pullback in August. We have earnings next week. It's a question and a time to see if people start putting their money where their AI mouth is. In other words, is all the hype around AI really translating to big growth for GPUs in the data center or other contexts? We're going to keep tracking it. This is Bloomberg. So after nearly 20 years of investing in Europe, the Silicon Valley firm IVP finally takes the leap and is opening an office in the UK, making its hub in London. Eric Liao, partner at IVP, who's relocating to London himself in 24 hours' time, joins us here on set in San Francisco. I want to start with a very big question, actually, which is you have chosen London.
Yep.
But you're investing in Europe.
That's right.
Why London and not a capital of continental Europe?
I think for a variety of reasons. London practically is an hour closer in time zone. It's candidly,
you mean to the United States?
The United States. Candidly, it's easier for my family. My wife and children will be joining me there. And while I've discovered in my decade-plus investing in London that I'm very lucky that most people in Europe doing business will speak English, there's still a lot of hours outside the day, and that'll be easier for us.
There are many who say, not myself, many who say London is just fintech and nothing else. Your response?
I'm not sure that's entirely true. Now, we certainly have seen a lot of fintech investing there. We've made our first London-based investment in a fintech company just recently called Volt.io. But I think you're actually seeing a lot of AI companies also attract talent and be built there, and we expect that to continue too.
And of course, I mean, IVP, no stranger to that fintech prowess that London managed to build. Also, of course, they weren't British entrepreneurs, but the founders of Wise you backed. But there's also UiPath, Supercell. You know a lot of them have exited some of these companies, and you're writing new checks already, Eric. I would just think of, well, Pigment, we had the co-CEO on previously on this show when they did their latest round that you're in. Where are you thinking, from an industry-specific place, to be putting money to work? Because they try and talk up AI as well across Europe.
Well, AI is top of everyone's mind, and we certainly will be looking at more investments there. We've actually already made two that are based in Europe, DeepL, which is in Cologne, Germany, and Grammarly, which has its roots in Ukraine. So we're very excited to see that trend continue. But I think what's also really captivated our imagination and has been a driver of the activity over the last dozen years or so for us is that we're seeing investments across a variety of tech sectors, from mobile gaming in Helsinki and in Istanbul, software companies like Pigment, as you mentioned, in Paris, and a variety of others. So we actually think that the entrepreneurs in Europe are quite creative, and they're going to come up with solutions that we're going to want to evaluate.
It's close. Look, you can tell from our accents to both Ed and my heart. I mean, Ed's Welsh. But, you know, we come from Europe. We've both been talking about the European ecosystem for coming up to a decade. And yet there's never been this really standout company. As much as they've wished it, you've seen, you know, there's much hand-wringing when DeepMind was sold to Google. There's always been this desire to see the equivalent of a Silicon Valley giant. Will that happen in Europe? Does it have to happen? Does it not matter?
I think it already has happened in many circumstances. I mean, we're not investors, but Spotify is a global leader in their category. So I think that is sort of the tip of the iceberg. I'd say, again, Supercell, their aspiration was not to be the best gaming company in Finland. It was to be one of the best in the world, and they've been able to deliver on that. So I think that trend will continue, and that's why we're doing this.
Eric, a big story on Bloomberg Technology in the past couple of weeks has been political developments in Israel, the judicial overhaul and its impact on the tech sector. How does IVP view Israel?
As a market, we find it quite interesting. We have a number of companies that also have a presence there, and it will be an area where we're going to continue to spend time. I'm woefully underqualified to make observations about the constitutional system there, but certainly we do try and evaluate other risks, including political risks, when we're making investments, and I hope that Israel will come out on the other side of it.
Let's get to the Eric Liao story and the on-the-ground story. Are you going to get on an aeroplane and fly to each capital city in Europe over the next few weeks and months? How are you going to go and set up a new coverage area, meet founders?
Well, I feel like you must be reading our internal memos, because that's exactly what we're going to be doing. So I'm moving with my family literally in 36 hours. We have two of our team members on the ground already, and this morning we announced we are hiring back one of our former colleagues to help lead the effort in London. And I know you said capital cities, but I would actually put forth, we'll spend time in Cologne, which is, I'm American enough to know that is not the capital of Germany, but we will be spending time in major tech hubs all throughout the continent.
Alex Lim, of course, returning to IVP as a general partner. Eric, what is the valuation story like in Europe at the moment? What is the difference in culture of writing checks there, do you think, that you're looking to, well, become an expert in?
Well, I'd say the valuation environment more broadly has receded from the excesses of 2021, so that is also making this an interesting time to think about building our presence there. I would say that also the change compared to, say, the first 5-10 years of my career, as far as investing in Europe goes, I think the opportunities, the visions, the aspirations are greater, and in many cases that will be justified by the exit valuations, which then trickles down to maybe the entry valuations new investors are paying today.
I'm excited for you. I'm sat here with all my jet lag, having just flown over from London. Used to be based covering tech in Berlin. I'm sure Ed and I are excited to go out there and see you in Europe. Eric Liao, safe trip over to London tomorrow, the IVB partner.
Thank you very much.
Brilliant to have that exclusive news here to Bloomberg TV. Meanwhile, coming up, 13F filings. They're trickling in. More on what the reports are revealing about, well, how hedge funds are investing in the second quarter, Ed.
Yeah, it's interesting you bring up 13F. Some of the chip names moving to the upside. If you look on the Bloomberg terminal, there have been funds adding these names. Micron up 5%. Bridgewater has added to its Micron position. AMD, another one where we see names adding or growing their positions in those stocks. What is it about these 13Fs? We always do this every quarter. We'll continue to track it. This is Bloomberg Technology. All right, going viral. Let's get back to the latest out of the Zuckerberg-Musk cage fight. Meta CEO Mark Zuckerberg is telling speculators to move on from the cage fight between him and Elon Musk. He took to Threads Sunday night saying he's going to focus on fighting people that actually want to fight, Caroline, that are into MMA. It's time to move on. If Elon Musk is ever serious, he knows how to reach him. Musk had also said, as you probably saw, that he had an MRI, he has a shoulder rubbing on the ribcage injury, it requires surgery.
And hadn't he also suggested, Ed, that they have a practice at the mixed martial arts facility that Zuck has at his own house? And so then he said, I'm going to come and knock on your door. But ultimately, it feels as though Mark Zuckerberg doesn't think Elon Musk is being serious at all here.
And he's been consistently skeptical. And the point is, these are two of the world's wealthiest people, CEOs of leading tech companies, proposing to fight each other in a cage, which is one reason we track it. But right now, it looks like it's not happening.
What is happening is actually we're getting some deadlines, some real hard facts in terms of where people are allocating funds, where they're taking money out of. Because it's the hedge funds disclosure period, of course. Equity investments for the second quarter in the so-called 13F filings is coming drip-feeding out. US Securities and Exchange Commission. Look, tech stocks always in focus, thanks to a lot of optimism that has been around artificial intelligence. Is it sticking? Emma Palmer is here with more. And some key findings from your perspective. What big picture are we seeing in terms of tech buying or selling?
Yes, so a lot of buying in the tech space. We're seeing that to be the most popular buying sector amongst the hedge funds that have filed so far. About more than 5,000 hedge funds have filed. We still have a ways to go through the day. Many of them do wait till later in the day to file. But from what we're seeing already, Microsoft, Apple, Amazon, Nvidia, Meta. These are the popular buys amongst a lot of the hedge funds. We're seeing some selling or reducing of stakes across energy, financials, and healthcare, so like the non-tech sectors. But interesting, to see a push in towards the space. For example, Rokos, a pretty big hedge fund, made a significant bet on the NASDAQ 100 ETF, growing that position to about $2.8 billion. He also bought Microsoft and Amazon.
What about Coatue? This is a big name tech investor. I've written about them a lot. They've backed companies that I've covered as a beat reporter. How have they been in this quarter gone?
Yes, so they've been very interesting. They've continued their buying spree. If you remember, last year they sat down a little bit, taking off their exposure as the market was unpredictable. Now they're jumping back in, really increasing their exposure to the market. They took 23 new positions in companies. They increased their stakes in 21 others. Among some of the things that they boosted their investments in, Microsoft, Amazon, some of their favorites. So we are seeing some interesting buying there.
What about selling?
Yes, so quite interesting on the decreasing of their positions. They decreased their stake in some of these really hot tech companies, right? So Nvidia, Meta, Tesla, Netflix. So the question would be, is this a fundamental change in view? And it's unlikely. Yeah. Philippe has been a pretty vocal supporter of Nvidia and some of the AI moves. It's a tech company, like investor. So what may be happening here is some portfolio management. decreasing exposure to maybe lock in some profits, adjusting the portfolio so you're not oversized in some exposures. So that could be why we're seeing some of the pullback in some of these very hot tech
Well,
stocks.
like the NASDAQ 100 did itself with its redistribution earlier in the month. Bloomberg's Hemant Palmer with all those 13F filings. That does it for this edition of Bloomberg Technology, where we're back together again, Ed.
Yeah, that's a reason to listen to the podcast and recap. You get both of our voices, Apple, Spotify, iHeart and Bloomberg. This is Bloomberg Technology.